The Toronto Regional Real Estate Board just released its 2026 market outlook, and there's a big change in the way they're presenting their 2026 projections. In years past, we were used to seeing one number per category. So in 2025, they projected 76,000 sales, and they projected average prices would be $1.147 million. Nice and simple, just one number. This year, sales, they'll end up somewhere between 60 and 70,000 units, and average prices will settle somewhere between $1 million and $1,030,000. When the organization with the most market data in Canada can only pin it down to a 10,000 sale range, that says something very big to me about the market in 2026. Continued uncertainty. Hey, my name's Rob Marsiglio with Valerie Real Estate, and if you're into data-driven market insights, this could be the channel for you. It's all the info with none of the fluff in this real estate industry. If that speaks to you, consider liking this video and subscribing to the channel so you don't miss anything going forward. In this video, I'm breaking down why housing prices are expected to drop another 3 to 5% in the first half of 2026, what that means for you if you are trying to time a purchase. I'm going to talk about the affordability gap for renters looking to buy right now. What can they afford, and what do the houses they want to buy actually cost? Last, we're going to wrap up with some research that MIT did in partnership with TRREB about missing middle housing and how it's created some hidden value in certain property types. The 2026 forecast, let's decode what these ranges actually mean. So TRREB is projecting that GTA home sales will likely range between 60,000 and 70,000 in 2026. For context, we had just over 62,000 sales across TRREB in 2025. So TRREB thinks that we are either going to stay flat, dip slightly, or maybe, just maybe, see sales activity tick up in 2026. As for prices, the GTA average price forecast range for 2026 is between $1 million and $1.03 million. That is going to be down from 2025, and it was just shy of $1.07 million. So we are looking at, even in the TRREB's best case scenario, another year of declining prices. Now, what you might miss just by reading these headline items is that TRREB is projecting that a lot of the pain in 2026 will be felt in the first half of the year. They're saying the first half of the year will look similar to 2025. However, if economic prospects and consumer confidence improve in the second half of the year, some pent-up demand that has built up over the past 3 years could begin to be relieved as a growing number of households look to take advantage of lower prices and borrowing costs. So some of those economic prospects would be, our trade relationship with the United States, obviously the labor market, just anything that's going to improve consumer confidence overall. If we see that consumer confidence improve, and again, it is a big if, it'll be the second half of 2026 where we see maybe some stabilization is what they're saying. They're not even calling for price increases in the second half of the year. In essence, what TRREB is saying is from January to June, the first half of this year, expect buyers' market conditions to continue to develop, see prices come down in the mid-single digits, activity continues to slow, and then the word potential does a lot of heavy lifting in the second half of the year. We could potentially see things stabilize. We could potentially see sales activity increase, but there's also a strong possibility that things do just stay soft through the rest of the year. Now, if you are a buyer and you are basing your decision to move on this report and the timing of it, right now would be the time that you have maximum negotiating power. In the second half, things could get tighter. From my experience, though, we have to include summer in the first half because things really do slow down. You tend to negotiate better deals in the summertime. So could we see a bit of a recovery or a stabilization in the fall market through the winter? Maybe, potentially, but if you were taking this report at face value, I'd say your opportunity for negotiating hard is going to be anytime between now and the end of August. If you're a seller, take a look at 2025's numbers. So detached home sales were down 10.6%, condo apartments were down 14.7%, townhomes down 12.4%, and the market that held up the best would be the semi-detached, where we saw sales come down 3.3%. On the flip side of that equation, new listings for all home types did jump mostly in the double digits. Townhomes got close at 9.3%, but detached was up 13.4%. Semis are up 17.3%, and condo apartments were up 3.3%. So bottom line is that more supply and less demand means you need to be pricing sharply, especially in the softer first half of 2026. That wraps up the forecast part of the report, but it doesn't explain the why. And for that, we need to look at what TRREB is calling the affordability paradox. If you've been wondering why home prices have dropped, affordability has improved, but sales numbers are still extremely slow, the Ipsos polling data in this report does a decent job at explaining it. Affordability has improved dramatically. Mortgage payments as a share of income dropped from 45% really at the peak here in 2023 to 32 or 33%. It's a big drop, and it's actually the best affordability that we have seen since going back to 2021. So logically, you'd think better affordability means more buyers coming back to market, means more sales occurring. But take a look at this. The Ipsos Home Buyers Survey found that GTA home buying intentions for 2026 dropped by 5 percentage points compared to 2025 to 22%. People can afford more, but fewer people actually want to buy. And why is that? The answer is this chart. So Ipsos asked renters two different questions. What monthly mortgage payment could you comfortably afford? And what monthly mortgage payment does your ideal home require? And the answers were that people could afford $2,673 comfortably, but the ideal home costs them $3,262 per month. That's a $589 gap. And this is why sales are down. It's not that people can't afford to buy, it's that they can't afford to buy what they want. This is the consequence of that gap. Young Ontarians aged 18 to 34 are most likely to leave the GTA within the next 5 years, primarily due to concerns about housing affordability and the flexibility offered by remote work. That is 66% of respondents aged 18 to 34 that are planning on leaving the GTA in the next 5 years. So homeowners that are hoping to sell to this demographic that could potentially be fleeing the GTA over the next 5 years need to price realistically right now if they want to sell to that next generation. The saving grace for would-be homebuyers right now that are currently renting is that the rental market across the GTA is still super soft. We are seeing an abundance of inventory coming to market. We are still seeing prices decline as well. It's just giving you more time to save up. So really, if you can't afford the home you want to buy and move into, but rent prices are still coming down, what is the rush to get into the market right now? Now, there's some good news for the 45% of respondents that had intentions to buy a home. So 45% of those were first-time home buyers. About 50% of those were in Toronto. The good news for these people is that investor demand is still really falling. With both condominium apartment selling prices and average rents down over the past year, coupled with more stringent regulations on short-term rentals, Ipsos found that intended investment activity for 2026 also receded. So fewer investors considering the purchase of rental units. Long story short, first-time home buyers are now just competing mostly against other first-time home buyers, maybe some downsizers and upsizers as well. That investor segment has really been removed from the buyer pool, or at least it's receding, continuing to recede into 2026. I've said it before and I'll say it again. There's never the perfect time to buy a home, and I'll never tell somebody right now is a great opportunity for you. But what I can confidently say is that 2026 is presenting the best opportunity for home buyers that we have seen in this decade. To wrap the video up, we'll talk about TRREB's research that they did in conjunction with MIT, yes, the MIT, about Toronto's multiplex zoning reform. In May 2023, the City of Toronto changed its zoning rules citywide to allow 2 to 4 building residential units as of right across most low-rise neighborhoods. MIT researchers analyzed approximately 65,700 freehold sales in Toronto from 2018 to 2025 to see if this policy affected prices. What they found is that properties with at least 30 feet of frontage or 3,000 square feet of lot area, which they classify as larger lots, they're estimating that there's 1 to 2% price premium in essence for these types of properties. Now, this didn't just happen all of a sudden in May of 2023. They noticed this price premium start to be baked in 2021. Is that as just a result of the hot market? Maybe, but it could also have been just in anticipation of this policy being rolled out. So potentially from 2021 and onwards, people were starting to see even more value in these larger lot properties. And let me explain why. It's because if you're buying a property with a larger lot in a prime location, maybe near transit, you're not just buying the home anymore with these new policies. You're buying the option to add laneway suites in, to convert it into a duplex, to maybe even subdivide the lot, build multiple units. There could even be a buy and hold play there to sell to a developer down the road. So buyers looking for these types of properties understand that you could potentially be paying that 1 to 2% premium on it. Look for opportunities where they're not asking for that premium note. Could be an opportunity for you down the road. And sellers, if you're trying to sell these types of properties, understand that you may be able to command a little bit more market value just because you have that larger lot and all the potential to do all these different things to your property in the future. The bottom line is that markets will go up, markets will go down, and it's really impossible to project. I can't really fault TRREB for adjusting their strategy this year and just giving a range, because trying to pinpoint a number is really a fool's errand. I can't predict what's going to happen with the market either, but what I can do is provide you with solid analysis, just backed by data, try and strip the emotion out as much as possible. That is really what I specialize in. So if you're looking to buy in 2026 and you appreciate somebody who has that approach, don't ever hesitate to reach out. I'm going to link this full report in the description of the video as well, so feel free to read through it at your own leisure and reach out with any questions you might have. If you found this breakdown helpful, don't hesitate to share it with friends who are trying to navigate this market. If you enjoyed the video, please like it and subscribe to the channel. Thank you so much for sticking with me right through to the end of this video. Until we speak again next time, please stay safe and cheers. Thanks so much for watching the entire video. If you enjoyed it, please like and subscribe to the channel and check out some of the other videos that I've done on screen now.